On today's show, crypto fraudsters. The Commodity Futures Trading Commission last week froze the assets of 4 individuals connected with a crypto trading scam. The 14,000 victims not only want these alleged crypto crooks' assets frozen, they also want their asses frozen as well, because they're going to be sitting on those cold stainless steel prison toilets serving time. I mean, they look really uncomfortable and cold, don't they? Yeah. Frozen asses. The Commodity Futures Trading Commission, the CFTC, has filed a complaint in the U.S. District Court for the Middle District of Florida against individuals Rene Laralde, Juan Pablo Valcarce, Brian Early, and Alicia Ann Kingray, along with their unincorporated, unregistered entity, Fundsz, spelled Fundsz. The complaint accuses them of engaging in fraudulent activities by soliciting clients to invest in cryptocurrencies and precious metals trading. The defendants allegedly claimed that Fundsz had a secret sauce using a proprietary algorithm, air quotes here, could generate consistent weekly returns of over 3% and promised significant growth on initial contributions, even suggesting that a $2,500 investment could turn into $1 million in 48 months without further deposits. They also presented Fundsz as a charitable endeavor supporting various causes such as clean water initiatives and humanitarian relief efforts. The weekly returns that Fundsz reported to their 14,000 customers were completely made up because Fundsz never engaged in any trading or investment activity, the claim alleges. The CFTC obtained a restraining order freezing the defendants' assets, preserving records, and appointing a temporary receiver. A hearing for a preliminary injunction is set for August 23rd. The CFTC aims to obtain restitution for defrauded investors, confiscate unlawfully obtained profits, impose civil monetary penalties, enforce permanent trading and registration bans, and secure a permanent injunction against future violations of the Commodity Exchange Act. The CFTC cautions that while orders for repaying victims may not be issued, recovering lost funds could be challenging if the wrongdoers lack sufficient assets or funds. And what a bummer. The director of enforcement at the CFTC, Ian McGinley, said, though the products fraudsters purport to trade and their methods of attracting victims, in this case through social media, may have changed, the old adage, if something sounds too good to be true, it probably is, remains as valid as ever. And that is true. The secret to building wealth is no secret. Spend less than you earn, invest wisely, and if it seems too good to be true, it probably is. But I'm not blaming any victims here, because that's what they are. They're victims, and we have this psychological fear of missing out, and we all want to be included in the next big gains. I mean, think about what happened with Bitcoin. You have a small amount of people who are the early investors that have reaped all the benefits. You know, cryptocurrency and Bitcoin was supposed to be this way to decentralize finance. Unfortunately, that's not the way it's turning out. The largest holder of Bitcoin is thought to be the guy who invented it by the alias. I'm blanking on his name here. Satoshi Nakamoto. Satoshi Nakamoto. At any rate, The second biggest holder of Bitcoin is the United States, with over $5 billion worth of crypto assets. And then you look at the list, the top 10 list, it's mainly private companies, institutional investors, and a few exceptions, such as the Winklevoss twins that really promoted the Bitcoin idea, and they've done very well also. So it hasn't really been this amazing tool that decentralizes finance, and it's certainly not going to be the tool that dilutes the concentration of wealth that big banks have. If cryptocurrency becomes the new form of currency, replaces fiat currency, what's going to stop big banks from taking their regular dollars and turning it into Bitcoin or Ethereum or any of these other tokens? What's going to stop them? I don't think anything will. And it won't do anything about the concentration of wealth that banks have. And yes, it allows a peer-to-peer way to exclude banks from borrowing money, but they have all the money right now. So it's going to be a limited endeavor because you have to have everybody on the crypto bandwagon, and not just everybody. It's got to be the right token as well. And we're at a phase that we don't know what the right token is. Bitcoin doesn't seem to be the token that people are going to be using to exchange goods and services with. Instead, it's now seen more like as a store of value, like gold. But the only real value it has is the perception that it does have value. And so what's going to happen in the future? What's going to happen to people, 100 years from now? Are they going to be cool with Bitcoin? They never even had a chance to mine it. They're going to be stuck spending these outrageous prices for one Bitcoin. So is it going to last? It's very speculative. And there are the people who have bought into it and they want it to last. But it doesn't mean that it's going to. You're going to always need new people to jump on board. And I don't know if that's going to happen. In the United States, the regulatory environment for cryptocurrency as an investment, as a trading platform, it's not hospitable. Just last Friday, Bittrex paid the SEC $24 million for operating an illegal trading platform. And Bittrex, they're defunct. They're a failed business at this point. And there are so many other failed crypto fintech trading platforms, and people have lost a lot of money, especially younger people who have invested at the highs, and then the crash came and it's gone now. And so I don't foresee that these tokens are going to be the tokens of the future, if at all. What I do see is this mixing between fiat currency, which is what we have now, dollars, country issued currency, using blockchain technology, integrating with it to make fiat currency, trying to make fiat currency have the advantages that cryptocurrency has, such as the Federal Reserve Bank, the United States Central Bank. They launched FedNow, which is an instant payment processing platform that banks and credit unions are now using to make instant transfers using blockchain technology. In the past, it would take days. You would even doing a wire transfer, which is supposed to be kind of immediate. Well, it gets lost in this wire limbo for a few hours. And so it never was instantaneous, and it has to do with credit. It's not actually taking money into one account and putting into another, it's saying, okay, yeah, you're doing a wire transfer. I'm going to credit your account even though we don't know where your money is. We're going to credit it anyways. And then there's all these fees associated with banks doing the crediting, and it's a very complicated process, and that definitely should be updated, and it's starting to. You're going to see more payment processors use blockchain technology, and that's going to be the future. But what about this decentralizing finance mission that Bitcoin and other crypto tokens have? Well, it's not going to be through crypto that our financial system is decentralized. We're skipping a step, and I mentioned it earlier about the concentration of wealth that banks have. Right now, in the United States, just 4 banks control half of all the banking assets in this country, and these 4 banks are some of the most penalized corporations in America doing business. So the Violation Tracker Project, it keeps track of all corporate penalties, and it's found that the number one violator is Bank of America. The number 2 violator is Chase. The number 4 violator is Wells Fargo, and the number 6 is Citigroup. So those are the 4 big banks, and they're also huge violators. To put that in perspective, just those 4 banks, they have more penalties than the 4 banks. Just those 4 banks, they have more penalties than the entire pharmaceutical industry. They have more penalties than the entire oil and gas industry. They have more penalties than both of the oil and gas industry and the pharmaceutical industry combined. So it's this incredible, unethical, exploitative industry that is the banking industry. They have a really tight grip on our money in this country. And something needs to be done. Now, a great starting place is by doing a simple step that any of us can do without passing any laws. There are simple steps that we can do. First off, to decentralize finance is to take your money out of a big bank and put it into a local credit union. Credit unions are nonprofit. Anytime they earn revenue above their expenses, they pump it right back into the credit union, offering their members financial services, often for free, like financial education, medallion services, notary services. They offer lines of credit, which Chase and Bank of America, they don't do personal lines of credit. They have higher interest rates for savings accounts, lower interest rates for taking out a loan. It's just better in your own financial best interest to bank with a credit union, and as a way to help decentralize our financial system. Another way to do that is through crowd investing. Crowd investing is unlocking the power of the private market and with the general public being able to invest in these private market investments via crowdfunding. So how is that significant? So within the private market, there is private lending, which is a way for non-banks to loan people and businesses money. And there are crowd lending platforms where people with as little as $10 can contribute to a loan. So if the loan is $10,000 and you put in $10, well, 999 other people can also put in $10 and fund that loan. And so it's a way to erode the wealth and power of big banks by competing with them. And there are a host of advantages by borrowing from a non-bank like a crowd lending platform. Far less red tape. There is more special interest. So you can go on a crowd lending platform that loans to small businesses. And the underwriters, they understand small businesses and these crowd lending platforms. And you could help finance the backbone of our country, the small business. This is just a few simple steps that we can all take. It doesn't take a lot. It's open to everybody. $10 is not a lot of money, and it's a way to invest that is, you're not. So this Fundsz, they were claiming 3% a week. That's crazy. That's like 150% return, annual return. It's not going to exist. But with crowd investing, you can earn over 10% market returns. Those investment opportunities are out there. That is not inconceivable. And with sound investing and continuing to make small contributions, well, you're going to build your wealth ethically in a way that's not tied to the stock market, not tied to corporate bottom line, not tied to outsourcing, and in a way to ultimately decentralize our finance and dilute the concentration of wealth that's in this country that is denying so many people opportunities. We now have that opportunity through crowd investing. My name is Paul Lovejoy. I am a crowd investor, and I see you are one too. If you'd like to know the 3 secrets of unlocking the private market to build wealth ethically, go to stakeholderenterprise.com.